All right, let's start off with real estate. That's where you made your mark. That's what most people know you for. Real estate investing in a rising rate environment. How does that work out for you?
That's a layup question?
Yeah, you can take it.
I mean, real estate, I just spoke here, and real estate has really always been block by block, asset by asset. And we have to talk generally about the asset classes, but they all behave differently.
Right.
And multifamily in the United States is having an incredible run. And we're seeing double-digit rent growth almost across the country, and it's not letting up. And it's a big component of inflation too, the cost of housing. So they've been underreporting inflation, frankly, in the cost of living numbers that they're looking backwards. And it's sort of shocking.
Yeah.
It is a direct function of the fact that we are short like 15 million housing units. We built 20 million plus every decade since the 40s. We only built 5 million from 2010 to 2020. So what you're seeing is this huge, as people came out of the pandemic and wanted to get a house, and there was a delay of the baby boomers, or the Gen Zs, their generation fell into the home building, the home buying market.
Right.
They all came to the market at once, and they're all trying to get their mortgage rates. So I think the residential, where rents are rising so fast, is okay with rising rates.
Okay.
Single family for rent, another big category. We helped create Invitation Homes.
Yeah.
They're the largest public player. I mean, they're seeing double-digit rent growth. That customer, he's getting wage growth.
Yeah.
So part of his ability to pay higher rents is he's getting 5.8% wage growth, and that's probably going to accelerate because there's tremendous pressure on wage inflation.
Right.
And people forget, like, many states are going to $15 an hour wages from 12 or 8 on their own without federal legislation. So where they can, they're doing it, and where they can't, they're just deciding if they will do it. So there's been disproportionately helping those that are most in need of this recovery and wage growth with middle class.
From an investment perspective, is there a lot more competition in that space, in the multifamily residential space?
I mean, yields have drifted down while interest rates are rising. And that makes me nervous. I'm always nervous when the cost of financing is more expensive than the yield on the property. We call that negative leverage. And in logistics, which has had a crazy run, partly pandemic fueled, but companies trying to get their last miles in place, and Amazon's expansion, and multis, both are seeing double-digit rent increases. And then you've seen a very powerful recovery in the hotel markets, and almost price-insensitive consumer. And across all, it's his behavior. He's complaining about the milk, he's complaining about the cost of travel, but he's paying the rates because American consumers, given that the home equity is the highest in history, they're rich. I mean, they're acting rich. They're traveling to resorts, they're spending money, and our occupancies are rising rapidly, and the business is definitely recovering.
Do you think that's going to be sustainable, or is this just kind of like the groundswell of everyone just wanting
a little
to get
bit of
back
that,
out?
a little bit of the mouse in the snake. It's going through the snake. So they bought.
That's quite the analogy.
They stayed home. They bought everything on earth. Couches, tables, chairs, new fixtures, furniture for their home because they were stuck in their house. Now they're shifting to travel. So everyone's going to see their cousin, their mother, their uncles, your relatives in Europe are just taking a trip because the people feel safe. The skies are open, the planes are full. You heard of Delta Airlines forecast. So, but I do think that will peter out too, coming in the fall when we go back to work, which finally will go back to work. I mean, I think that you'll see most cities in the U.S., 70% physical occupancy of leased space. And today it's still in the 40s in New York.
So, but all that office, I mean, with regards to the office space and all the other retail that was attached to it, at least in the major cities that we know have kind of suffered a little bit because of that. Do you think it'll get back to maybe pre-pandemic levels, or it's going to be at a baseline below that?
The blue cities are going to struggle with higher vacancy rates for a while. And San Francisco it might be 5 years for San Francisco to get back. I mean, even Salesforce, which built this brand new tower, is telling people they don't have to come to work. I was in San Francisco 2 days last week. It's not. It's probably the worst city I've been in the United States, and I travel extensively. It just feels like they've abandoned the town, like the night of living dangerously or something, like a creature's coming out. There's nobody on the streets. New York is really booming, which is shocking. I mean, our hotels in Midtown and Brooklyn are virtually full, but nobody's in the office, so I'm kind of curious who these people are. But we're going to the summer, and the Europeans will come back. One of every 2 foreign travelers actually visits New York. The museums are open, the sports teams are in business, so I think it'll be a very good summer for travel and tourism in the major cities, and the resorts have done very well and probably continue to do well.
Right.
So,
what geographically, with some of the rotation that we've seen, obviously a lot of folks during the pandemic were able to go down to Florida, Miami, for example, Texas, a lot of other states where they found either a better cost of living or just a better environment for them. Do you think that those trends are going to be persistent enough to make it attractive for investing?
Yes.
Yes.
I mean, I think the Texases, the Floridas, the Tennessees, the Nevada, Reno, the lower tax states are definitely getting an increasing benefit, which will be sustained past the pandemic. It was already happening pre-pandemic. So it accelerated because people decided, hey, I can work from home. I can work from a boat outside my home in Fort Lauderdale, or even move to Tampa. I mean, it's Orlando. There's job creation. It's affordable. And now, I would say Miami and Palm Beach are getting very unaffordable, but the northern cities, Sarasota, Tampa, Orlando, Jacksonville, they're going to have a good run here.
I am curious, for some of the cities that have been shedding residents to some of these other places here, why don't you think you've seen a little bit more, I guess, proactiveness on the part of the governments and the policymakers there to kind of stem that tide, whether it's lowering taxes or more incentives?
It's quite the opposite. After New York got $100 billion from the federal government in the America's Recovery Act, because de Blasio was running $6 and $7 billion deficits, they still raised taxes. The legislature still raised taxes, even though they got this $100 billion from the government. There's a patina of this, that business is evil, that permeates, I'll call the dark blue states now, and it's driving wealth and companies out. And actually, they're okay with that. The New York legislature said to a friend of mine who runs a top venture capital firm, they said, we understand property prices will drop. We want them to drop because it makes it more affordable for the people we represent. That is a very dangerous and a slippery slope. That VC firm left New York after the Albany legislature said that to him. He just picked up and came to Miami. He's actually renting space in my, I won't say where he's renting it. So anyway, I think that attitude, and I grew up in New England. I'm a born and bred. I grew up in Connecticut, and I love New England. And Boston, I carve out of the blue states. That's a blue state that's working. They've got the healthcare system down. There hasn't been a lot of crime. The universities continue to power life sciences and exploration, and that's a booming market. We have a big project north of Boston and Burlington. We're doing a build-to-suit for a new tenant. But the general patina over New Jersey and New York is very business unfriendly. And the CEOs are kind of tired of being villains. They're not villains, they're good people. But I would say there's like 98% of the police force is good. 98% of CEOs are responsible and conscious people. And the media in those cities is not their friends.